What's going on, traders? Welcome back to the buildatrader YouTube channel. We're jumping right back into things here on this video. This video I'm going to be talking about understanding market structure, but on the lower time frames. So here we are back on our chart of the $yen USD JPY. We are on the 4-hour time frame currently. Now, something I didn't go into too much in depth when I was introducing the higher time frame market structure is something called a break of structure. Okay? And what a break of structure is when the market transitions from either an uptrend to a downtrend or from a downtrend to an uptrend. Okay? So as we know, in an uptrend we make a series of higher highs and higher lows, right? Illustrated in these arrows. Okay? Now, for an uptrend to be transitioned into a downtrend, it has to do this. Structure has to break. Okay? It has to break a higher low point. So this arrow would be a bearish push. Structure would be where this point is right here. Okay? Our structure points in an uptrend are higher highs and higher lows. Okay? So if a higher low is broken in an uptrend, it means that potentially it's probable that the uptrend may be transitioning from bullish to bearish. Okay? Because a higher low should not be broken unless it is transitioning from bullish to bearish. So in this example here, market structure broke right here, broke the higher low point, came back up to make a lower high, and then continue down to make a new lower low. Okay? That's one situation we have here with market structure breaking from bullish to bearish. Now here's another example. Say we are currently bearish in making bearish market structure, lower highs and lower lows. We're in a downtrend. Okay, I'm going to draw that up. Now we can see we have a downtrend right here, correct? Making lower highs and lower lows. Now for a downtrend to be violated, for a downtrend to be broken, to go from bearish to bullish, market structure has to break. Similarly to how an uptrend, market structure has to break from bullish to bearish. In a downtrend, market structure has to break to go from to go from bearish to bullish. Okay, so what needs to happen? So here's our lower high point right here. This blue line is. This area needs to be broken entirely for it to transition from bearish to bullish, just as the previous example I just showed. Okay, so let's draw this arrow. So as we can see, market structure has been broken. It's probable that it's broken. Market comes back to make a higher low point, and then makes a new higher high point, illustrating bearish market structure transitioning into bullish market structure. Okay? So now why am I bringing this up? Because now it's imperative you understand this, because we're only building on top of things. Okay? So the higher time frame, there weren't that many structure breaks in the example that I showed. There was one when it went from, in this example right here, went from an uptrend to a downtrend. I did show that towards the end of the last video. Now, when you're on the lower time frames, there's a lot more structure, a lot more details. That's what I've been trying to say. You know, the time frames all have their own trends, and on the lower time frame, you can see there's way more trends, way more data. Okay? See, there's a lot more structure breaks that happens way more often than on the higher time frame, right? Because it takes a lot more data to develop those higher time frame structures and candlesticks. But on the lower time frames, a lot of stuff happens, and that's how the intraday traders take advantage of these moves and make money during the day, each day, each week, each hour, each couple minutes, depending on your trading style. If you're a scalper or intraday trader or breakout trader, whatever you trade, however you trade, structure is still the same. Okay, so here we are on the 4 hour. we're gonna look at this area right here, okay? Starting here, right where the mouse is. So I'm gonna illustrate this with the arrows. Need to push, lower high, lower low, another lower high. Let me fix this here. And a lower low basically down here. Okay. And then push up, push down. Now basically the example I just showed. Kind of move sideways here. Now the market obviously went up and down. This movement is sideways. Okay, didn't make lower highs or lower lows, right? Played in between a range. Played in between a range like this. Draw a second arrow. Played in between here, right? It only moves sideways, it did not move in a trend. It was not trending. Okay, normally when you see this, the market is taking a break. It's trying to decide what it's going to do. Is it going to continue bearish, or is this level going to hold? And are we going to transition and start making bullish market structure? We're going to go from bearish to bullish. So in this example here, move sideways until what? What happened? Market structure broke. Don't see it? Here it is. Where this black line is, I'm going to draw the blue line right above it. Market structure broke here. Okay, it transitioned from bearish, as you can see. Lower highs and lower lows on the left side, pushing sideways until we broke that level, broke that blue line. Remember, to go from bearish to bullish, it has to break market structure, right? So we can clearly see the example I drew right here in the arrows is similar to this situation on the charts here, right? So let me add some additional arrows so you can see some more clarity here. Now once this happens, okay, once market structure breaks, that's your first indication that, okay, things are transitioning from bullish or from bearish to bullish and vice versa. Okay, so now the next point is what? Trying to find where the higher low is. Now that's how you would take a trade, is finding where the higher low is. However, we're not learning to get in on trades quite yet. You're just understanding the basics of market movements and understanding how price patterns work. And once you get a strong understanding of that, along with all the other technicals, then you can understand how to trade. You know, it's a process. It's a learning process, baby steps. So from here, the market pulled back, made a higher low point, basically to retest the level it just broke. Retest the broken market structure, retest previous structure, and then shot up bullish. Okay, made a big push to the upside, and then came down. See, in an uptrend, what happens next after a higher high? Okay, this would be considered a higher high. This high right here was higher than these highs here. That's why market structure broke. We have a higher low point here, and then the market pushed, broke this high to make a higher high up into this point where we're at here currently, where this arrow is. And the market pulled back to make a higher low point, right? Because we haven't had a higher low point yet. You know, always in an uptrend, there will be a higher low point, and vice versa. In a downtrend, there will always be a lower low point unless structure is broken and the market is transitioning from bullish to bearish and bearish to bullish. So you can see here, higher low point, market kind of pushed sideways briefly up until we broke this high right here. Continue with our uptrend that we have. Now you might say, well, isn't this a lower high? Well, it's possible. Yeah, but you'll learn more in this next video it's hard not to bring up certain concepts without you getting lost. So, but basically, this is high low point on a level of support. Market moved sideways, pushed, made a high point, made a new higher low point here to continue with the overall bullish momentum that the market had. This market structure has not broken in any type of way. Okay, as you can see, no structure has been broken. There's been no higher low point broken because this is the first higher low point. Now, if the market pushed like how it did, and then this level is broken, for example, let me show this with arrows, how it pushed like this, and then came back down. If it went like that, and this level of support did not hold, then yeah, it would continue bearish, and until it hit this level, or until it decided to do whatever it wanted to do. But that didn't happen. What happened was it pushed higher to continue with the bullish momentum. Market structure was not broken. So, sorry. Let's drop down to a lower time frame here. Another lower time frame, so you can see more details. This is the 2-hour time frame. As you can see, we just marked up this area on the 4-hour time frame. And you can see there's a little more details. There's twice the amount of candlestick data because it takes 2 of these candles to make one 4-hour candle. Okay? So, we have our transition that I illustrated from bearish market structure to bullish market structure. And as you can see on the lower time frame, it gets a little messy though. Okay, so that's where experience and really understanding candlesticks and market structure come into play when you are learning to be an intraday trader and learning how to day trade. Okay, so let's show an example of market structure transitioning from bullish to bearish. Okay, from an uptrend to a downtrend. Right here is perfect. So as you can see, market right here. Let's back up a second. Right here, market broke structure. It just happens over and over and over. See, it was bearish, lower high, lower low, pushed up, made a lower high, respected the same low it made, and then broke this structure. Now, if this was respected, this candle right here, this big bullish candle, that broke the structure. If it was respected, it could have just continued down, but it didn't. Okay, because structure broke. Momentum pushed up. Had a minor pullback here. Another higher high. Market came down, made another higher low point to continue our uptrend. Still a lot of bullish momentum here, and pushed to make a new higher high. Okay, then what happened? Market came down. Okay, so you don't know what's happening yet. Let's pretend this is not here. Okay, I'm gonna pretend this data right here, the blue box is not here yet. Okay, so you would see that the market, you would expect in this point a higher low point, okay, because you're making higher highs and higher lows. You're in an uptrend. This is bullish market structure. Okay, you'd be looking for buys. Okay, because we don't have this data here. Market came down. Looks like it kind of wicked off this little level here, this previous higher low, and what you would expect normally is a continuation to make another higher high, right, and then make another higher low, and so on and so forth, as I've just illustrated. But that's not what happened in this situation. And that's what you need to be very keen in, why your understanding of market structure and candlestick analysis needs to be very, very strong. Because once you see these cues and these details, you understand, okay, actually I think something else is going on. It might not be so bullish anymore. Maybe we're transitioning. Let's stay out of the market. Let's see what's going to happen. Okay? Because as a trader, you can always get in and out of the market. You have that ability. At your own discretion, you can get in and get out whenever you want to. It's all about discipline, and self-control. But moving on, we're gonna move this box. So as you can see, what happened. Market tried to make a higher low, which it did. This low point, where I just drew the arrow, is higher than this low point here. Okay. But what happened? We made a lower high. Now, when you see this, when you're trading, you know, let's say for example, you got in at this, you know, these wicks here, caught this low point, and it pushed up and didn't break these highs, and you're like, okay, maybe we're not so bullish anymore. Because if it was bullish, if it was going to continue, bullish market structure, continue making a higher high, in theory, it would keep going. It wouldn't do this. Okay, so that's your first indication. Now, this does not mean, okay, it's going bearish now. No, it's a clue. Your spidey senses should go off. You're like, okay, something's up. Let's get out, or you know, let's take profits, or let's take the small loss. So whatever the situation is, let's see what's gonna happen. We have a lower high. We have a low point here. After a lower high, what comes next? Typically a lower low, and that's what happened here. Market structure was broken, which is this blue line. Our uptrend market structure is this point here. Well, actually, to be quite honest, it would technically be this point, because this low point is higher than this point, okay? So I'm gonna mark this up with the half circle so you can see a little better. Our previous higher low, our new higher low that was made, right? Now, what happened next? Lower high here. After this low point was broken, as you can see, there's a lot of bearish momentum. It just kept going down, basically. Okay, because traders see this, oh, structure broke, we're about to have a bearish impulse, we're about to push bearish. Because after a lower high comes a lower low. Once this point breaks, most people are going, okay, a lower low is coming. And that is exactly what happened, based off the market structure. Boom, push down here. The market actually try to find support on that little previous level here, but it ultimately just continued to the downside. Had a minor pullback and then continued bearish. Now, as you can see in this example, we went from bullish market structure of higher highs and higher lows on this 2-hour lower time frame, higher low point, made a higher high, came down and made a higher low. And as I previously mentioned, you would expect a higher high after this, but that didn't happen. It made a lower high here, where this half circle is, and the market came down with a lot of bearish momentum, broke our low point. If this point is broken, that means the market is transition. You, instead of looking for buys, you'd be looking for sells. So in this level here, the market push and try to find support, this is where you would take a sell. Obviously, in this situation, not always, just in this particular situation. Came down and then continued to the downside, down to these lows here, where we first broke structure to the upside. Okay? Now you may be like, oh, a lot of these levels are lining up. Yes, they do. We're going to go into this in the next video, and the next video is going to be on higher time frame and lower time frame market structure, time frame correlation, as well as more details of breakup structures and how they happen on the lower time frame and correlate with the higher time frame. So more in depth on time frame correlation between the higher time frames and lower time frames, and breakup structures as well. Now, that's all I have for this video, and I hope you guys enjoyed and learned a lot from this. Stay tuned for the next one, and hope you guys have a great week.